Good morning, guys. Bit of a late start today, but so see if we hold up today. Yesterday was this is the SPY, the S&P. What up, Blad Michael? How you doing? So yesterday volume was lower than the previous day, where we had some buying there. There's some buying here. We broke that support there at this low. We had a few days right there where we were buying it up, but we're still going lower. Well, they're still not done selling it off. And if you don't know what caused yesterday's larger sell-off, apparently Trump threatened. Here's the Nasdaq. Trump threatened to put tariffs on pretty much all of the Chinese imports, and so that definitely could be an economic downer for both China and the U.S., which could put us into even a deeper sell-off. Here's that 15% sell-off we were looking for. We hit that yesterday right at that low. And then here's that 20% sell-off, which would indicate the start of a bear market. And the way this sell-off has gone, can't put this out of the realm of possibility at this stage of the game. We've only had one bounce here, pretty egregious. Volume's increasing on the way down. So that's actually not really a good thing right there. In terms of recession, bear market, or crash, collapse, if you will. I was thinking about it yesterday in the afternoon. I was watching it go down. Hey, what's up, Eli? Yeah, I was thinking as I'm watching it yesterday that. Sorry, guys, still kind of barely waking up here. So let's just go to weekly, and we've only got a few weeks in the sell-off here. But if you take so we've got 4 pretty big red weeks here. That's pretty elevated. Let's really zoom out. So the volume is extremely elevated. Last time we saw this kind of mad volume was down here towards the ladder, towards the big break. This was the bigger break. I don't remember the exact course of events. So there's a big week there and a big week there, and we ended up chopping around for a considerable amount of time. So that's about just under 6 months, 23 weeks. Math isn't working in my head right now, so whatever that is. We ended up kind of chopping around. We did go, I mean, definitely went lower, and the volume was lower too on the weekly. Right there we had a bottoming week on what was not exceptional volume. So we talked about the high volume, buying the high volume, which generally works in a normal correction environment. This may not be that. This may not be that. So it looks like my TQQ position may be underwater for a while. All right, market opened. What do we got here? We got a few stocks. A few stocks going up. Yeah, this is a very aggressive sell-off. we put this trend line. Is that the same? Is that the right trend line? It looks like that's just all of these closes or tops right there. More red today. Yeah, looks like at least some red today. Maybe if depending how much red, that's a different issue. But didn't even get the gap up from yesterday. What do you mean property prices are going down a lot? Which market are you referring to there, Blair? Talking about London again? So there's the Qs. Yeah, I actually added a little bit to my NQ position down here. Just to be honest with you guys, I added a little bit, about a quarter of my existing position. Oh no, about a third. About a third I added to it. Oh, in SoCal? Really? That's interesting. Googling that right now. One of it's just because they're so expensive. Sales below 500,000 dropped 21% on a year-over-year basis. It's because there's no salaries. There's no pay increase. All right, the Qs and the SPY are ever so slightly positive. This isn't going to bounce right back. More than likely, we'll see some oscillation. Need some nice sideways action, other than this just falling of prices. It's a pretty aggressive fall here. All right, there's our 12%, and there's our 15% on the Qs. I was down the most. Oh, Solo's down the most today. Our good buddy Solo. LL, UVE, Trex, Chesapeake Energy. Amazon down 2. What are you doing, Amazon? And so it's bouncing up from a gap lower, so that's healthy. Apple's really been the one holding this market up. You see the move in Apple right there. I don't know, earnings are coming up. Looks like 11-1. It's like on Thursday after market. That could be bad. Charcoal? Oh, coal? Um, that was HCC, Daniel. HCC. Yeah, still looks okay. Hasn't completely died yet. Again, I don't know why this is looking so healthy. Obviously, because there's probably a supply problem with coal in the United States. I also think they're a big exporter of coal, but I don't think the rest of the world has tried to quash coal as much as the U.S. has. So that's why I'm a little confused by this. Internationally, you think coal would be a fuel of choice. But yeah, it's still looking good. Held the 50-day moving average right there recently. It's looking great. There's nearly nothing bad about this chart even now. Another one that's looking good, that's holding up pretty good if you're looking for some strength in the market, is Alta. IBD's talked about them several times over the past couple weeks. What's this? I saw this on the sidebar for CNBC. Elon Musk says he deleted his Tesla titles to see what would happen. Oh, that's funny. Man, he's getting too confident, man. Just getting too cocky. That could be his downfall. So Ulta here on the longer term time frame, putting in a very large cut base. It looks pretty deep. 40% deep. It's kind of deep for a big cup base, but either way, I want to slice it there. Whether it's a cup or it looks like a flat base here, it's still looking okay. Taking a look at our buddy Solo we found yesterday. Closed well off the highs. 21.8 million shares traded. I think its float is that. Maybe multiple times its float. Oh yeah, I can't find that because it's not on FinViz. So never mind. I know nothing about Solo. Fizz, which was looking good, no longer looking great. Lower volume, but it looks like it's about to break this little bear flag here. That could be a good short, as a matter of fact. Maybe an easy run down to 85 here for Fizz. A little bear flag. What do you think about that, Eli? How do you stay calm in this market? What are you going to do about it? You can't do much about it. So if you're... I'm in a leveraged ETF of an index, so I know in time it'll come back. Now, I saw GE today was just crashing low. Remember how it was popped up on the CEO news right there? And someone asked me if you should buy it, and I said, yeah, probably not. So if I'm in like an individual name such as GE, I would probably not be as calm. Yeah, so you're an Amazon. And yeah, I mean, it's a toughie, man. The emotions are tough. As soon as you kind of get, you have to kind of get numb to the emotions, and I'm kind of just sick of being, or got sick of being all panicked all the time. Panicked you don't have enough on the way up. Panicked you haven't sold enough on the way down. Just kind of over it. I mean, really, I've just been over it. I'm like, yeah, I'm just not going to be panicked anymore. There's no need for it. You know, you have to keep a level head to make rational decisions anyways. And sometimes, straight up tape reading doesn't do the job. Like if you look at sometimes, I don't know what does the job. Just no, I usually don't sit through major corrections with position. I mean, I have in the past. I tend to trade a little more frequently though, so than I do hold a lot. Like I won't hold Amazon for 15 years. Wish I could do that. It's just not in my personality, I think. Not an individual stock. Now I do like the TQQQ for holding. The one downfall to that, which I don't talk about it all the time. I don't talk about this all the time, but it's just it's the second side to the beast that is TQQQ, is that how best can I show this? It has to do with compound interest, and the way compound interest works is, maybe I could show it this way. So the decline here was 12%, and the decline here was 32%. I already forgot that first number, 12%? Yeah, 12 and 32%. So in order to get back to these highs, oh, you're going to cover the frickin' highs. You suck. There's no super easy way to do this. I guess I could just zoom in. Hold on a second. So on the Qs, it took it. Just using this as an example. I don't know exactly how this is going to play out, but from that ultimate low back until it touched that recent high right there, took about, giving it the benefit of the doubt, 63 days. Okay. Let's see how long it took here. Took 68 days. It takes a little bit longer for the TQs to get back to two highs off of sell-offs due to that compounding interest, because on the way it compounds on the way up, but it also compounds on the way down, and that can give it a longer recovery period to a full-blown break-even point. So it kind of has to do with. I hope does that make sense? Because if you're gaining 3%, 3%, 3%, 3%, 3%, you're going to have, you're basically compounding every day. You're gaining that 3% every day, which gives you greater than a 3% rate of return. What would be adding up 3%? You get better rates by multiplying that 3% on itself than adding it, which is what you're doing, right? That's what we're doing every day here. So when it goes down, it compounds those going down, and so it takes more. It takes more to comp. So to go from 100%, to go from 100 to 50 is a 50% drop, but 50 to 100 is a 100% rise. Does that make sense? So it takes more to push it up than it does to drop it. So that's kind of the the little hidden beast of TQQQ. I've talked about it, but I don't harp on it. If I do, then I have to talk about it for 5 to 10 minutes every time I do it. So that's kind of the negative here, is that buying down here, I'm in the negative here, right there. I did, like I said, I added a little bit yesterday, not a lot, but again, this is an index. This is not GE. This is not Amazon. Nothing like that. It's an index. So even if Amazon stays weak for a few more months, TQQQ could, in theory, round itself back out to the upside here. As long as Apple holds strong. And here's the kicker right now, in my opinion. If Apple breaks, you could probably consider this market easily down into this bear market mode. Where'd it go? And 20% is what we're looking for. Right about there. Oh yeah, 160 right there. Look at that. Good job. Yeah, where was that? Who's talking about 160? 260. Daniel. SPY to test 260. Yeah, look at that. Good job. Yeah, it's been an area of recent support too. I mean, to be honest with you, I hope we don't go much lower than these lows here in the SPY. I'm not sure where we're at in the Qs on that. Let's check that out. Down here. This would be that bear market mode. Yeah, as it sits right now, this is already going to take a while to come back, to be honest with you. From these lows, you can kind of see here how we dropped, and it took, 68 bars to get to a new high. It dropped here in 20 days, or 14 bars to 68 bars. So that was like a 6-to-1. So if this is the low, we still can't be guaranteed it's that, you're looking at 19 bars, and you're looking at like another 60, 70 bars. So at a minimum, we'll probably do that, but they usually don't happen in V's. Not like that. So I would assume this could take us out to middle of next year, maybe, before we get back up here into highs. Is what it is. There's nothing you can do about it, so just keep living your lives. Is it worth it to double down on a TQQQ? Yes, I think you can. So like I said, I bought a little bit yesterday. I don't know what my exact fill was, but we're in elevated volume territory. This usually doesn't stay elevated and sold off for an extremely long time. So I did add a little bit. This is not akin what I would do with any other stock, or maybe even any other ETF, depending on the sector. You never know what sector is going to come back into favor. Biotech always seems to make its way back up. But yeah, I think down here you could add. I don't know about doubling down. Not quite sure about doubling down, but I think you could add a little bit down here. Like I said, I added about a third of my position at this level. Daniel agrees about the Apple sentiment. Yeah, I think it's pretty important. It's held up. It's held up a tremendous amount. And in terms of market cap, I mean, it's huge. So I'm going to go to FinViz and let's just go ahead and list. Let's list stocks by market cap. So out of 200 billion, there's 2 pages of market cap. And we've got Apple still over $1 trillion, 800 in Amazon. And you think about it, that's $1.8 trillion. What does it take to get 1.8 trillion out of the next? Why is this way? Oh, that's funny. That's kind of weird. I always find it really interesting how the market cap of these, like Berkshire being 500 billion, how do they have another class that's 500 billion? How do they double their own market cap just out of nowhere? That's interesting. Zero volume today. Go Berkshire. But yeah, 1.8 billion right there. If you take a look at the next ones, Alibaba's next. I didn't realize that. Wow. So 3, 4, 5. That's 6. So 600 million. 11, 12, 13, 14, 15. So 19. Takes like 4 or 5. So you're looking at Facebook, Cisco, Berkshire, Bank of America. Wow, how's Bank of America way up here? Is that right? That's probably not right. There we go. Okay. Why wouldn't what it listed? Oh, it probably listed it by ticker. Apple, Amazon, Microsoft, Google. That's better. Berkshire, Facebook, Johnson & Johnson. Wow. JP Morgan, then Alibaba. That makes more sense. So you're looking at Johnson & Johnson. It's like Berkshire Hathaway, Johnson & Johnson, the 2 biggest non-tech companies. Interesting. So these are your bellwethers in the market right here. I mean, Apple's really going to determine quite a bit of the direction. I mean, Amazon has already cut off quite a bit from theirs, and Microsoft. So we can go ahead and take a look at these real quick. So we got Apple doing good things this morning. Volume not really aggressive. Neither is it on the Qs over there. Volume's not aggressive on the Qs. Amazon. We know Amazon's already taken it on the chin. I mean, it's already down about 20. Was it 22%? 28% now. So Amazon was down 28%. Microsoft holding above the 200-day moving average. It's been down. I can't even see it on that chart anymore. Whoops. Down 12%, which isn't too bad. That definitely could go down lower. Google. I actually didn't look at Google. It broke through that longer. That's not a good sign. Broke through that longer-term trend line. Now we're coming up to another longer-term trend line. Looks like that'll definitely be tested. I mean, it looks like this thing's just begun. 22%. So these things can still fall a little bit more. These biggers, BRK/A. So Berkshire Hathaway come back to a longer-term trend line right there. Facebook. Not having a good day today. Down 1%. I don't have... Okay, so there's Facebook. Oh, it doesn't. I'm trying to draw a trend line here. A long trend line there. Long trend line right there. Maybe that'll be an area of support. Just maybe. And then we kind of have that on Facebook. So what's Facebook doing? Not too great. Earnings. Oh, yay. Out today after market. So Ignore whatever Facebook does today, because earnings are coming out, and that's really what matters. So there's Facebook, Johnson & Johnson, consumer staple, holding up really good. We actually have a buy over what would technically be a cup with handle. Not looking too bad, as a matter of fact. Look at that nice tight little day right there. Could even be a little buy over these highs or this high in J&J. This could be a flight to quality situation right here. They're looking for a more defensive, so they're investing in Johnson & Johnson, which could be a reason for this nice little flag pattern. Oh, they already had earnings too, which is good. So they missed by a penny. Looks like the market doesn't really care about that too much. JPM looking okay, still within a range, hasn't broken the range yet. Baba, which is a Chinese company, Chinese Amazon, I believe. Don't quote me on that, but I think that's what it is. And then ExxonMobil rank out the top 12. Visa, Walmart in 14. Wow, Visa down to 200-day. When does that happen? Usually never. I mean, Visa on the 200-day. Last time that happened was after we broke out here, and they kind of chopped around the 200-day for a while, but still kept going up. We had this one with a slow retrace, a double bottom, and then another bounce, and then looks like and there's IPO. Damn, I remember that IPO too. Man, what a journey for Visa. Memories. Walmart is next. And Walmart, yeah, looking good here. Let's take a look at how it's doing today. So sold off yesterday pretty hard. Yesterday. And then today looks like it's trying to go back. But volume, very sparse here. Only 10% of average volume. Almost half an hour through the trading day. There's 13 half-hour sessions. So if you extrapolate this times 13, you'll get, just over 8 million plus 3 more. So but usually the first half hour and the last half hour of the trading day do have the most volume in them. So you can figure 10 of those are not going to have a tremendous amount of volume. So probably won't reach average volume, but we'll see. We'll see how volume maintains throughout the day. Looks like Qs are up 1% here, which is good. So that high volume area down here, there, like we noted, there has been a little bit of strength buying up here and there. Hopefully that continues, but we'll see. Usually this thing is rallied and then sold off the rest of the day. We had yesterday was called a gap and crap. A gap's higher and then just craps throughout the rest of the day. Here's a gap and go, but this one sold off throughout the rest of the day. So we're having kind of two sides to the market. On one instance, we do have some big bars that sell off the entire part of the day. Here, this one too, and this one even with a gap. So that's kind of an added bonus on a Monday right there. And then other days where we've had two-sided markets. So, and as we mentioned yesterday, we're just looking for follow-through days at this stage in the game, aren't we? That's really the thing to do here, is really not to panic, not to start guessing where the bottom is, although I guess we're trying to play that game. But yeah, really the best thing to do in this case is try to not guess where the bottom is. Even though, like I said, I added some yesterday. It's probably not a wise move for most investors, most traders, I should say. But rather try to wait for that follow through day, which again is 4 days after a bottom. So this is day 1. This is day 1 here. This is day 0. This is day 1. Wait for 4 days, then you're looking for a good price day, over 0.75%, over 1%, as high as you can get, with volume higher than the previous day, and that is your follow-through day. Something similar to this day right there, but this was on day 3. This would have been day 4. This was on day 3, and so that's why it didn't confirm the follow-through day. seems slightly overcast this morning. All right, what's still dying here? Solo's still dying. We got Fizz down 6%. Ooh, further out of that bear flag right there. Man, I talked about that when it was right there, and it looks like it already dropped off quite a bit. Chesapeake. Let's look at some of these. Stop trying to prove the market right. Only trade setups you know, or that meets your rules or system. Yeah, absolutely. There's a cash is a position. Believe it or not, you don't always have to be fully invested. There's an extraordinarily successful trader, Dan Zanger, who goes cash all the time, just full cash. He sees a setup, he buys. He doesn't see a setup, he doesn't buy, and he's cash the rest of the time. Yeah. Let's kind of breeze through these, see if there's anything horrible that we need to pay attention to. LL Lumber Liquidator still rocking lower on earnings right there. Chesapeake Energy, looks like they had earnings and they gapped down. Fizz, we noted earlier this morning on the bear flag, that already had a move there. You could maybe try to reshort if it gets back up here, but CVNA Carvana looking kind of like a mini frozen rope. This is actually that's what Dan Zanger's coined this. I don't know if it's like a worldwide thing yet, but a little bit of a frozen rope pattern. If it breaks that, should accelerate and continue. TZA, which is the 3 times long Russell 2000 ETF. Torch been rolling over ever since breaking that support right there. It looks like a buck. It's been having a hard time. All right, Auto Home. Interesting price action here. Looks like it's kind of going up, but not really. CTSH, bit of a bounce. 9. Look at that. That's all the red there is on my charts here. 9 coming down. Interesting. See if it gets supported there at the 50. That could maybe be, if the market's maintaining itself, that could maybe be a potential buy point. If I remember the earnings on 9, and don't quote me here, I think they were pretty good. All the fundamentals on 9 were good. CLR taking it on the chin. Boom. Wow, that's a measured move that worked out right there. They don't all work out, but that's one that did. Ulta actually down today and looks like a green tape, 1.3% now, up for the Qs. And then Ulta finding a little bit of support here today off the 50-day right there. NVGS, BITA, SIVB, we were looking for that to break. It never did. Remember that, guys? It just never quite broke. Never did quite break. And then, boom, chart exploded. LVS, way down in the doldrums. Look at that 200-day moving average. See ya. Boom. Just down. Wow, 85 versus 77. No wonder you gap lower. That does not look great right there. NVGS. IQ looks like it's rolling over. It does have earnings coming up. We'll see what happens there. Twilio. Oh, there's Amazon down 0.53%, which means it's up a little bit from where it was earlier. It was down 1 to 2%. Phonars, Twilio again has pen. Now we're getting towards these 0.2%, so it's going to jump around here like a madman. At least my symbols are. I'm not going to be able to go like in an order. Tesla looking good. Nice little stalling day yesterday. Today looks like a little consolidation day. That's good. Who you're rounding over? There's, like I said, there's Tesla again. We're going to see a lot of interchopping as we get close towards zero. You're going to see a lot of the same stocks over and over again. Send, after being bought out for some reason, having price action. I don't quite understand that deal. Facebook on that longer-term trend line, again with earnings coming up. This one's today, right? Yep. Earnings today. Earnings today, guys. Square on the 200-day. It's never really been on the 200-day, not in a run at least. So this may be, unless something's fundamentally changed with payment systems, SQ down about 36%. It's like earnings coming up to 11.7 a week. Possibly, I'm not advocating a buy here, but just keep an eye on it down here towards the 200-day. You don't see some of these names down so low. And if you are going to bottom buy, it's not something I advocate as a practice, but if you do bottom buy, please make sure it's in a company that is not highly speculative. Make sure it's in a company that shouldn't be where it is. Those are usually the best times to bottom buy, even from a charting perspective, you know. So you still need to know fundamentally about if these guys are crap companies or good companies. I wanted to look at PayPal, and it'll probably be easier just for me just to type PayPal. All right, so there's PayPal. There's the 200-day moving average, chopping around that level right now. Again, Square came down quite significantly. Square and PayPal are competitors. PayPal having more strength, though. Definitely having more inroads with merchants. Square doing the whole Bitcoin thing, I guess. Although this does look like an H pattern on Square. Have to see what happens with earnings there. So, like I said, not advocating buying there, but anytime you see a stock down really low, you should this is a good time to make those watch lists. Maybe we'll do that tomorrow. I'll try to get to bed a little bit earlier, and we'll go through and we'll do some watch list stuff. Say, hey, we'll go by market cap even. Oh, Tesla looks like it's up now. Facebook looks like it's up now, 0.2%. Boeing, apparently I'm on Boeing now, up 0.31%. Yesterday in the Slack chat room, someone mentioned that Boeing was having mechanical problems and a plane just died, killing 190 people. I said, as bad as that sucks, usually a good time to buy. They usually bounce on news like that. Eli says NVIDIA's up. Let's take a peek. So NVIDIA, I think, is one of the FANG stocks, if I'm not mistaken. 300 to 180 with a quickness. 40% down with a quickness. That's usually, I don't know if it's not usually anything, but it is down 40% with a quickness. I'm assuming there's a trend line here that I could probably draw that maybe could try to get you into NVIDIA. I'm still assuming artificial intelligence is a thing. I'm assuming machine learning is still a thing, and self-driving cars is still a thing. So this could be one of those stocks with elevated volume levels down towards a low. Probably some accumulation going on here on NVIDIA. Think about it. If you're a money manager with a couple $100 million to work with here, what are some names you're probably looking at for some growth? NVIDIA would be one of those after undercutting pretty much all of 2018 price action. That could be one you may start to get interested in, unless there's been a fundamental shift. But last time I checked, we're still doing those highly advanced technological things. ABETG. Let's kind of click through some of these. Weibo. Anything you guys want to look at specifically? Any names that you guys are interested in? Man, EOG took it on the chin there. Eli Lilly. Here's a name that would have worked really well if the market didn't take a big giant sledgehammer to itself. Eli would have worked out. Probably still will work out pretty well. Look at that, finding support at prior support. Whoops, I went off screen. Close enough. Okay, so yeah, Eli Lilly finding support at prior support. We'll see if this is a bear flag, a rising wedge, or what it is. Looks like in the next week or so, we'll see how that goes. But there's another trend line here. Yeah, we'll take a look at Qualcomm. So that's such a weird thing. We'll see what that even is. What is Qualcomm? I don't remember anymore. Did they change their symbol? No, it doesn't look like they did. Looking at a 5G play, I'm assuming, for Qualcomm. That's pretty much the only thing they got going for themselves these days. Looking at Qualcomm weekly long term has been very flat for quite a considerable amount of time. So, yeah, this is not a leading stock. I usually don't try not to participate in stocks that don't have upward trajectories and momentum. This one definitely does not. Very choppy for several years. No major end to that in sight. Doesn't have to stop. So I generally won't trade stocks like this. I'd much rather trade trade something with an upward trajectory to it. I maybe would be interested down there, but even not so, probably not so much. But either way, talking about stocks at lows, I don't know if you can really kind of get a beat for where this is going to go. It's been extremely choppy. No major trends, which means there's no major players involved, which means it's going to trend worse. And you can see here, you've got a higher low, a lower high. You've got a lower high, a higher low. You've got some not too many gaps, but trend line that's broken. Looks like that tends to cause a little bit of a run. So maybe if a trend line breaks right there, you could try to get involved. Until then, stay out of it. On the 5G front, I don't know what their status is on the 5G front. But like I said, with the price action setting up the way it is, see, here's a first pop. I'd be a little more interested if it were to break that trend line, which it never did. Even that high, which it never did. This one tried to break out once or twice without success. This one here just rallied and then just ended. So at this stage in the game, you're looking for a break of this trend line, or you're looking for a break of this high here. But either way, it's not set up well at all. Just to be honest with you, let's go look at the leaders, at the winners of the day on my list. If you guys have a different list, I'll be happy to check out something on your list. GNC is never going to load, apparently. Twilio. Oh, no, Take-Two Interactive. I was going to say we already looked at Twilio. All right, Take-Two Interactive has earnings coming up. Gaming sector here looks like it's still holding on strong, chopping around the 200-day there slightly. Earnings in a week. Melly. ADXS. CGC, a marijuana company bouncing off the 200-day. No major volume right there. Restoration Hardware. Chopping around the 200-day, which is done, looks like here recently in the past, but no major buying impetus right there. There's CGC again, Waddell Reed again, Car, which is Avis Rent-A-Car, TNA, undercutting a big trend line. That's a three times Russell long. Right here, TZA is 3 times Russell short. I think I misquoted that earlier. TZA is 3 times Russell 2000 short. Tilroy 3%. Casa. That's it. I don't remember Casa. I remember it, but I don't remember it. All right, a lot of stuff chopping around 3% here, really messing with my ability to click on things. Plug, Sherwin-Williams, man, taking it on the chin there. They're not joking around with that sell-off. That's 27% in what should be a very leading company. Well, it was leading a couple of years ago. Obviously, it's, I guess, not doing so hot right now. But quite a bit of selling right there. That one is going to need a lot of time. LPLA. Looks like I'm not getting full data sets here, ladies and gentlemen. You can see right there. That's OGRMF. That's an IPO. That's why that's not a full data set. CDNA. Come on, man. MJ up 3%, bouncing off the lows in concert with a lot of them. Jumping around too much here. AVGO, Foot Locker. ANET looking like a bit of an H pattern. If it breaks that low, it's a good short. If it doesn't, maybe that'll act as support in the future. Fighting a little bit of support down here, but it's not the end. What the hell, man? Match.com, these things jumping around too quick for me to click on effectively. So Match.com breaking the 50-day right there, coming down to the 200-day. Not really selling off a tremendous amount. Earnings coming up 11.7. You find a lot of the stocks you look at have about the same earnings date. I don't know why it works out that way. It just usually does. All right, Quad U right there. Still in that rising channel. Living towards the lows. It could be a diamond bottom with that one big candle if we put in kind of some inside days here going forward. You'd have a buy point here over that 303 level for UU. Where am I? C-Trip, Regeneron, GMed holding up nicely. That's a little bit new. Also 11.7, 11.8 aftermarket. Etsy, FSS. Glog. There's Race again. We have an alert well up there. Race down here at lows. It's like Ferrari is going to get second in the F1 championship and second in the points championship, driver and constructor championship. So I don't know if that bodes well for them or not. I think last year around this time, looks like it didn't really cause any stock market reaction. Not that it should, but just thinking about, hey, Ferrari just watched the F1 race yesterday on my DVR. Great race. Go Max Verstappen. That kid's a future, man. ABC, INSG holding up pretty good. Look at that. That's not bad. I don't mind that. I don't mind that one bit. That looks pretty good. 11.6 aftermarket on INSG. Wow, look at a line. Holy crap, huge gap on earnings. Well, ladies and gentlemen, there's no more teeth in the world, and so we're going out of business. All right, guys. Yeah, I'm floundering about right now. NASDAQ, I'm going to get out of here, down back to 0.6% to the upside. Ideally, I mean, really the best thing here to do for price action would be for just to quiet down at this stage in the game. Get away from these big daily ranges, which we have not been able to get away from so far. And that's really the best thing we can do. And then we can kind of revisit, and see what the price action brings. But right now, the price action's gotten wider. You can actually see this trend line, which has nothing to do with this price action at this stage of the game. Putting in, hey, daycare, putting in the what looks like a broadening wedge if you draw those trend lines together. So it's very interesting that the price action is broadening. We need more narrow price action. This is going to take a long time to wear off. Like I said, will probably be not at new highs at a minimum for, I think, 4 months, in my opinion, at a minimum. Doesn't mean that we can't just chop around here for for 2.5, 3 of those months, and then we can slowly go higher. Maybe Trump cancels his tariffs. Maybe China gives in. Either way, I think the U.S. would benefit from either of those scenarios at this stage of the game. So, all right, guys, get out of here. Have a good one. See you tomorrow.